Good morning. Welcome to Market Monday for August 11th, 2025. Could it be a Goldilocks economy? As humans, one way we simplify an infinitely complex world is by categorizing it. True or false, good or bad, bull or bear, recession or not. These binary categories may serve a purpose in providing a simple framework for understanding a topic. But as we talk about so often here at Market Monday, more often than not, at best, they lack the necessary nuance to accurately understand the topic at hand, and at worst, are subject to manipulation. Case in point, remember this? So, which is it? On one hand, a popular media group says the US economy softened as tariffs weighed on the consumer, while another media organization says the economy returned to growth. So if we can get comfortable in the gray area, maybe we can find the nuance necessary to understand these topics more completely. After all, author F. Scott Fitzgerald said, "The test of a first-rate intelligence is the ability to hold two opposed ideas in the mind at the same time and still retain the ability to function." First, let's rewind a couple months. There will be blood. Wow, not a very neutral posture. This, of course, from JP Morgan right around peak tariff. Not to be outdone by Moody's chief economist, chief economist, stating the US is standing on the precipice of recession. You can only imagine what this same guy was saying right before the 25% rebound in the stock market since April. Buckle up, etc., etc. But what's actually been happening? Earnings revisions, when companies revise their earnings, when they revise them higher, which means their earnings and outlooks are better than they expected, this line goes up. Here's when the stock market peaked on January 4th, 2022, coinciding closely with the stock market bottom in October of 2022. And then fast forward to tariff tantrum in April, a few months ago, and screaming higher ever since. Now, this is earnings revisions, not the stock market. But as we talk about so often, earnings are the bedrock of the stock market. So we should expect some connection between the two. And it's not just the S&P 500, which is dominated by a handful of tech companies. Every single sector has had more positive earnings revisions than negative over the past 3 months. Not quite what you'd expect standing on the precipice of recession. Is it possible we're going to get just the right amount of reflation in just the right product and services categories where there remains the right amount of pricing power and the right amount of consumption demand to further fuel the right amount of accelerating earnings? Perhaps a better framework to view the current situation isn't through a Goldilocks lens of just right, but more about holding the good and the bad in our minds at the same time. After all, we are of first-rate intelligence, aren't we? Aren't we? Post-election years tend to peak in August, drawing down through October. Here's 2025 tracking the seasonality well. Here's another look, showing August and September being challenging months, no matter what time frame you look at. But if earnings keep up as we showed you before, the fourth quarter seasonality could be the best time of the year for stocks again. What's driving those earnings? As I talked about last week, AI spending, surpassing consumption for the first time ever, as we see right here. And that's a welcome sign as the K-shaped economy is in full effect. We see the top 20% of earners are continuing to spend accounting for half of all spending. Clearly, the economy and those earnings are relying more heavily on that top tier to keep spending. Consistent raises, huge increases in home values, and an all-time high stock market, collectively called the wealth effect, surely boosting their confidence. With a sluggish housing market marked by slowing construction and declines in prices across the country, it seems the $2 trillion deficit, 2 trillion with a T, seems to be a crucial pillar supporting the economy. So, in fact, the current situation may not be just right as Goldilocks would have it, but instead is a tension between good and bad, positive and negative, that, at least for now, has the economy and markets in pretty good shape. And today we'll leave you with, last week, President Trump signed an executive order allowing cryptocurrency like Bitcoin, in addition to private equity in 401k retirement plans. Have a great week.